In the heart of Wall Street, where towering buildings symbolize power and wealth, some of the biggest financial empires in history were built and destroyed. For decades, investment banks ruled global finance, moving trillions of dollars and shaping economies around the world. But the same ambition that built these giants also led to their dramatic collapse. At the center of this story were legendary firms like Lehman Brothers, Stearns, and Goldman Sachs. These institutions controlled massive trading operations, advising governments, corporations, and investors. In the early 2000s, profits soared as banks invested heavily in mortgage-backed securities, financial products tied to the booming US housing market. For a while, it seemed like easy money. Homes were selling fast, loans were everywhere, and Wall Street was making billions. But beneath the success, a dangerous risk was growing. Banks were lending huge amounts of money to borrowers who often couldn't repay their mortgages. Those risky loans were packaged into complex financial products and sold to investors around the world. The system looked profitable, but it was fragile. Then in 2007, cracks began to appear. Housing prices started falling, homeowners defaulted on their loans, and suddenly those safe investments became toxic. The crisis exploded in global financial crisis of 2008. One of the most shocking moments came on September 15, 2008. After 158 years in business, Lehman Brothers filed for bankruptcy, the largest corporate collapse in US history. Global markets panicked, billions of dollars vanished overnight, banks stopped lending, and stock markets crashed across the world. Another giant, Stearns, had already collapsed earlier that year and was forced into an emergency sale to JP Chase. Governments and central banks rushed to stabilize the financial system, fearing a complete economic meltdown. The crisis didn't just affect banks. Millions of people lost their jobs, their homes, and their savings. Entire economies slowed down as trust in the financial system disappeared. Yet from the chaos, some institutions survived and even grew stronger. Firms like Goldman Sachs adapted, tightened regulations followed, and governments introduced new rules to prevent another collapse. Today, Wall Street still stands as the symbol of global finance, but the lessons of 2008 remain a warning. The rise of financial giants can be spectacular, but their fall can shake the entire world. Because on Wall Street, fortunes can be made in seconds and lost even faster. Like and subscribe.